Hello and good morning, everybody. You're with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European session market outlook. As usual, starting with the North American markets, we're going to be quite short there. Basically, no movements on Friday. And today, of course, Dow, Nasdaq moved just a little bit. The Dixie index just slightly up. On Friday, Reuters Michigan Consumer Sentiment Index came 3.1 better than expected at 92.1. Rose in October after three straight months of declines. Industrial production month on month as expected at 0.2%. And capacity utilization for September 0.1% better than expected at 77.5. Today, we have a little bit of a housing market index data. In Canada, the Canadian Parliament federal election will be held to elect 338 members to the Parliament of Canada, from which the government would be formed. This would be today. On Wednesday, we also have the interest rate decision and the CPI data on Friday. For the European markets, the DAX and the CAC 40 just a little changed on Friday. We had European core CPI year on year as expected and as previous 0.9%. The month on month actual 0.2%, estimated 0.2, previous 0, and year on year as expected and previous at minus 0.1%. European trade balance actual 19.8 billion, estimated 22.2, previous 22.4. European Union leaders have postponed a deeper discussion of the future of the Eurozone until December because of divergent views in the biggest countries and because of the more pressing migration issue. This is what the diplomats are saying. The European leaders who meet on Thursday in Brussels were to talk about fleshing out a report on the future of the Economic and Monetary Union, which is the EMU, prepared by the 28 nation bloc's top 5 officials in June, the so-called 5 Presidents Report, as the Greek debt crisis was shaking the Eurozone's foundations. Officials said that while both Germany and France wanted a stronger Eurozone, the Germans were more focused on how to enforce existing European rules, while the French are more focused on how to distribute money from a future Eurozone budget called a fiscal capacity. Officials also said that with a full-blown migration crisis on their hands, the chairman of the European leaders, Mr. Donald Tusk, wanted to focus on one continuous issue at a time, leaving Eurozone integration plans for later. Scheduling such a discussion for December was all the more justified, and they were also to be based on ideas from the European Commission, which would take forward some aspects of the June report. Today, we have a monthly Bundesbank Report in Germany. Tomorrow, we have the Producer Price Index there, and also the Swiss trade balance and European current accounts. On Thursday, ECB interest rate decision and monetary policy statement, also followed by press conference. On Friday, we have European, German, and French market services PMI. This is all for European markets for this week. Moving to the Asian front, the Nikkei 225, 72 points up on Friday, going down today 175 points already. The stocks on the Asian markets are currently trading mixed, with the major benchmarks unimpressed by better than expected China GDP figures. While we're on it, the GDP quarter on quarter for the third quarter better than the previous, now at 1.7% from previous 1.8, The retail sales in China also with 0.1% better than the forecast, now at 10.9%. The industrial production went 0.9% below expectations, now at 5.7%. Also, The GDP year-on-year for the third quarter, 0.1% below expectations, now at 6.9%. Basically, China's economy expanded quicker than the economists forecasted in the third quarter, as the services sector propped up the world's second largest economy, suggesting monetary and fiscal stimulus is keeping Premier Li Keqiang his expectations for 2015 target within reach. A stronger services sector and a robust consumption are helping offset weaknesses in manufacturing and exports as well. The government has cut interest rates 5 times since November and bolstered infrastructure spending in recent months to keep growth from sliding too far below this year's target for about 7%. The Japanese stock had a softer starter to the week, despite the positive lead from the Wall Street overnight, as investors resorted to profit-taking after the recent rally. However, the sentiment was slightly lifted after above estimates China's GDP data, boosting the USD JPY pair and hence offering some a respite to the exporter stocks. On Friday, we're going to have the Caixin Manufacturing PMI, which is the major report by the end of this week in Asia. Moving to commodities, the S&P 500 index had a range of about 15 points on Friday, currently at 2030. Saudi Arabia is delaying payments to government contractors as the slump in oil prices pushes the country into deficit for the first time since 2009. China's crude oil processing in September fell from the previous month as refiners shut for seasonal maintenance amid an economic slowdown. Refineries processed 42.43 million metric tons of crude last month, or about 10.37 million barrels a day. Crude prices went down today, this morning. Investors were also eyeing moves on Sunday by the United States and the European Union to take formal legal steps to lift sanctions on Iran once Tehran meets the conditions tied to the landmark nuclear agreement with major world powers. Basically, the US approved conditional sanctions waivers for Iran on Sunday, though it cautioned they would not take effect until Tehran has curbed its nuclear program, as required, of course, under the historical nuclear deal reached in Vienna, which was this summer in July. The European Union has published legal acts that open the way towards a deal. The WTI had $1.30 range on Friday, currently very close to $47 per barrel. Gold had a range of $10, trading at $11.72 currently. It fell on Friday as a recovering dollar pulled prices from 31 months high. The doubts over whether the Federal Reserve press ahead with the US rate rise this year kept the metal on track for a second weekly rise. Gold was down 0.5% at 1,182. Currently is holding near its 200-day moving average, a level it broke this week for the first time since May. The market received slightly better US data, which saw the dollar rally, so that seems to have scared off some of the gold buyers for the moment. Silver had a range of 22 cents at $15.90 currently. Natural gas is trading at $2.45 per British thermal unit. The range on Friday was 5 cents. That's all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers and bye-bye.